Hi guys, today I'll try to explain a very important concept which is the forward PE or the forward EPS. So when I say forward PE, it means like what would be the PE, what would be the price by earning ratio of a company after 1 year or 2 year depending upon the management guidance. So let's take an example of KP Energy over here. So when I say that KP Energy has a current market price of rupees 503 and has a stock price by earning ratio of 29.2, so how it is coming from 503 to around 29.2. So here what we will do, we will go and find out what is the EPS. So EPS, so we have to check the current EPS, which is 17 point which is 17.29. So now coming, how we calculated, like how it is coming, the P is coming around, current P is coming around 30. So for this, so what is the P ratio? P ratio is basically current market price divided by earning per share. And as we just see that for KPL the current market price is 500 and earning per share is around 17.3. So if you will go and find out like what is this 500 divided by 17.3, you will find out like it is coming out around 29. Now coming back to the management guidance. So KPL's management has guided that they will increase their revenue by 60 to 70% in financial year 26. So which means in March 2026 they will try to do the top line, which is top line is here. So they will increase this top line by 60 to 70%. So which means if they are increasing the top line by 60 to 70%, it means that they will actually increase the operating margin as well as the net profit by 60 to 70% as well, which means that this EPS will also increase by 60 to 70%. So now when we say that the 60-70% increment in the EPS, it means like 17.3 into we are taking 1.6 means 60% increment in the EPS, which will come around uh, 28. So when I say that this EPS is actually increasing to 28 after 1 year, that is in financial year 26, it means that now EPS has increased, means earning per share has increased, and price, current price is 500. Okay, now if I would take the current price as 500 and the EPS as 28, so my PE would come around 18, which is very low. Okay, so we know that the lower the P, the better is the potential of a stock. So to re-rate the PE, what would happen? This PE would increase, and how it would increase? It would increase through the stock price. So my stock price would increase. Now how much this stock price would increase? So this will depend upon the sector. So coming to the sector, here we can see that there are multiple companies in the same sector, and the median PE is around, for this particular sector, is 35.69. So let's assume after 1 year this median PE also gets stabilized and comes around 30. Okay, PE, what would happen? So my formula is price divided by earning per share is equals to PE. And as I assume that my KPL PE would be 30 after 1 year, like my sector P would be 30 after 1 year, not KPL P, and my EPS would be around 28. So I have to find the price. So my price would be around 840 after 1 year. So this is something the potential of the. Now let's conclude this particular explanation. So my forward P guidance for next year would be 18, and my forward EPS guidance for financial year 26 would be 28, and the potential in this stock is 8, like the price can go up to 840 based on the management guidance on their top line, which is currently now, like the current price is now 500. It's a simple, like 68% upside is possible for this particular stock. I hope you guys like this video, and if there are any doubts, you can ask in the Discord. I would be very happy to help you out in understanding of the forward PE and forward EPS and the potential of the stock. Thank you.